Hey guys, thank you for joining me today. My name is Nick Bentley. I'm the managing partner here at Bentley Capital Ventures. And today we're going to talk about the effect of bad credit on business loans and what you can do about it. The majority of business owners that we speak with do have some credit issues. They've either been turned away by the banks or they're looking for quick funding, and they know that they don't want to go through the SBA process of a several month period. They need cash very quickly. So whether you have good or bad credit, there's a lot of good alternatives for you at Bentley Capital. But specifically today, due to the volume of business owners we speak with that do have bad credit, that's what we're focusing on. So small business loans for bad credit, what do entrepreneurs need to do when they need to access capital yet they can't due to credit hurdles? Most of the businesses, even though you may be running a perfectly profitable business, you've shown consistent revenues month over month. You've been in business for a few years. You're in a steady industry. You're not high risk at all. But let's say you have credit score of 600. You're not going to get approved for an SBA loan with that type of credit score. So even though you could be running a perfectly good business, you're still probably going to be turned down at a traditional bank like Wells Fargo or Bank of America. Any bank like that, they don't like lending to small businesses. A recent post came out: less than 3% of bank deposits are spent funding small businesses, and haven't seen any increase in that over the last several years. Not anticipating it. Alternative lending lent about $3 billion in 2013. And they're expected to do much more than that by the end of 2014. So it's definitely a way business owners can access capital, access it quickly. So these types of loans, these bank loans, these private equity bank loans that we specialize in, they do not determine whether or not a business loan will be granted based on credit. Will credit have a factor in the underwriting decision? Yes. But it won't be based on whether or not you get approved or not. It'll be on whether or not you get the maximum loan amount. So I'll give you for example. You could be running a perfectly profitable business. You've got clean bank statements. And when I say clean, you've got less than 5 NSFs, less than 5 negative days. You've got some good ending balances. You're showing increasing revenues month over month. You're looking to expand, either to buy a piece of equipment or build out the building. And you need some cash, you need a quick capital infusion to cover those expenses. And let's say you've got about 600 credit. If you've got 600 credit, as far as private equity loans go, that is a perfectly suitable credit score to receive anywhere from 50 to 80% of what you're depositing. So if you're doing, if you're doing 50 grand a month, you can get anywhere from probably 30 to 40 grand within about 2 business days. So that's one example at 600. And you can find out more by clicking on our revenue-based loan calculator to find out where you fit in based on, I'll show you guys real quick, based on, what your credit is, what you're depositing and what you can expect based on your credit. So the percentages are right here. So if I go back though, give me 1 second here. The effect of bad credit on business loans. The problem with less than 600 credit, if you are going to take out these types of loans, is that they're going to chop the legs out from under you. And what I mean by that is, if you have 500 credit, you're still going to get approved, but you could be doing something like 30 grand a month, and they're going to give you a starter loan, something like $5,000 to $7,500, just to see if your business can be an attractive lending risk. So they call this a relationship type loan. All these private equity loans are based on relationship. You prove that you're a good borrower, they will continue to extend you capital even if you have credit hurdles. So that's something that you want to keep in mind. If you do have bad credit, a lot of companies, what they'll do is they'll come and they get the money that they need to take the next steps in their business. But when they talk to one of our funding managers, and they discuss with the business owner what the outcome will be based on credit, based on bank, based on what they're showing as tax returns. If we can use anything like P&Ls and balance sheets to justify a higher loan amount, of course, we always try to do that. But one of the things that we do is we suggest pairing with a sister company to improve credit. So let's say you get your $10,000 loan amount, and 3-4 months down the road, you're paid back about 50% on your loan. If we can increase your credit score, even 50 to 125 points, if our sister company can do that, then when you go to take out your second loan, you're going to be in a much better situation to actually leverage the strengths in your business to the best of their advantage. So just to sum it up, I want to give you guys a really quick video on the effect of bad credit on business loans, specifically our private equity business loans. They will not have an effect on the underwriting decision, whether or not you get approved, but they will have an effect on what amount will be distributed to you via the private bank. So if you guys have any questions, you can shoot me an email, nick@bentleycapitalventures.com, or visit our website to find out what you can get pre-approved for. Have a good day.